Hello everyone, welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 16th of June, 2023. Alright everyone, let's get into it. So we have an update from the DevConnect kind of Twitter account here today, basically giving us a glimpse at what the DevConnect event in Istanbul in November is going to look like. So this is an early look at the schedule, which you can check out. I'll link it in the YouTube description below, or you can go to devconnect.org/schedule here, but basically, the event is taking place between Monday, November 13th and Sunday, November 19th, and there are obviously a bunch of different events to attend on those dates. Yeah, now, of course, this will keep getting filled out. This isn't it, right? This is just a really early kind of preview of it, but it already looks very cool. You know, you have e-stakers staking gathering here in the first couple of days. You have an Autonomous Worlds event happening. Obviously, the ETH Global stuff happening as well. Bunch of other days here, like Light Client Summit, EVM Summit. I mean, this is going to be really, really cool. ETHconomics, so all about Ethereum economics from the Robust Incentives Group. But yeah, so if you are going to this event, it's shaping up and looking like a really fun one. I don't think I'll be attending, unfortunately. I mean, I was on the fence about it. I was like 50-50, but I'm like probably like 90-10 now, 90% not going, 10% maybe going. I do actually want to go, but there's like a few reasons why I'm not going. One, I didn't actually enjoy the kind of like outlay of the DevConnect in Amsterdam. I didn't enjoy having to like keep switching venues. I know obviously Amsterdam is a really cool city to walk around and all that sorts of stuff, and that was cool, don't get me wrong, but I don't know, it was annoying because like everyone was fragmented everywhere. I had to go to different places just to meet up with people, and yeah, it just annoyed me. So I think that Istanbul is being scheduled in the same way, where there's going to be obviously multiple venues and people can go between them, and yeah, I just didn't enjoy it. I much prefer like obviously ETH Denver, where it's just like one central venue that everyone goes to, but that's like one of the reasons. Another reason is that traveling, you know, I'm doing a bunch of other stuff around that close to that date in November, and I don't want to have to travel that much, because traveling from Australia is kind of a big ask for a lot of the world, unfortunately. But enough about me. If you are going, I think this is going to be a really great event. I mean, it is being hosted by the Ethereum Foundation, of course. They always throw great events. They only host two events, DevConnect and DevCon. And just a fun bit of history here, DevConnect was born basically because of COVID, because DevCon was basically cancelled because of COVID, and then they were looking for other venues, and they didn't want to wait that long, so they basically had DevConnect, and now they have two events a year pretty much. Well, DevConnect kind of pushed DevCon to next year, the next DevCon, so DevCon for next year is going to be somewhere in Southeast Asia, and I'm like 99% sure I'm going to be at that one, of course, but DevConnect was born out of that, so it's very new. Amsterdam was the first one last year, and obviously Istanbul will be the second one this year, so you can go check out this preliminary schedule, which, as I said, will keep getting filled out as time goes on. All right, the EF, or Ethereum Foundation Ecosystem Support Program, has put out a blog post detailing their allocation update for Q1 of this year. So this, of course, as usual, goes through all of the projects that they gave grants to. There's quite a number of them on this list here from different categories such as Layer 2s, developer experience, cryptography, all that good stuff there. And I think they usually say the dollar amount of what they distributed, but I don't know if the dollar amount is actually on this time. I didn't see it when I went through it earlier. No, it doesn't seem there. Oh, no, here it is. Okay, it's down the bottom. That's why I missed it. So they awarded $12.9 million in Q1, which is huge, right? That's a huge amount of money. And I mean, there are quite a few teams here. I don't know if they've actually named how many teams there are here. Numbered how many teams there are. Just eyeballing it, maybe there's like 50 or so teams or something like that. I don't know. There's a lot, right? And you can go through obviously the post here and check this out for yourself. But you guys know the Ethereum Foundation does this every quarter. They give out grants to various projects improving the Ethereum ecosystem across a wide number of categories. It's not just focused on one thing. It's focused on many different things. And that really is the whole point of the Ethereum Foundation at the end of the day. They do have a healthy amount of contractors that are paid out of the Ethereum Foundation to do Ethereum related stuff, whether that's research, in the core research stuff, or core development, or the core dev side of things, or planning events like DevConnect and DevCon, and doing, community outreach, all that sorts of stuff, right? But then they also do their grant allocations through the ecosystem support program, which is exactly what this is here. And this is where, and it's funny, this is where the money goes when the Ethereum Foundation cashes out their ETH. They're not just taking profits on it it so Vitalik can buy yachts. I mean, we all know that Vitalik is not someone who actually cares very much about money. He's definitely very. It's funny looking at him because it's like you wouldn't know that he had money unless you knew who he was, because he just like dresses normally, right? It's not like he's wearing designer clothes or designer watches. He's not like Richard Hart flexing all the wealth everywhere. I just truly don't think Vitalik cares about that. But yeah, the EF is not cashing out ETH to go buy Lambos and yachts and anything like that. They're cashing it out to fund these things, right? Fund, obviously, the contractors that they have at the Ethereum Foundation, but also give out grants like this and do this once a quarter. Because even if they're only giving out, $12 million a quarter, that adds up really, really quickly per year, right? And they've done this for quite a while now. This isn't obviously the first one that they've done. So if you work that out on a kind of yearly basis there, that's $48 million a year just to grants, not including whatever amount of money they're paying out to all of their contractors a year, which I'm sure wouldn't be a small amount, because I don't know the exact numbers, but I think there's at least 100 contractors employed by the Ethereum Foundation. And then you can, obviously do a naive assumption about what salary they're all on, and you can choose the lower end and it's still high. Like you can say they're all on 100 grand a year each, being in US dollars, which I think is too low. It's probably more than that for a lot of people, but that would still give you 10 million a year in just that. And then put in all other things, right? Their burn could very well be almost $100 million a year in terms of all the different things that they're funding here. And that's just me doing napkin math. But I mean, the Ethereum Foundation only has a limited amount of ETH, so they obviously want to be strategic about when they sell it. And they seem to, at least over the last few years, they seem to be able to manage their treasury a lot better than they did in the early days. Because if you actually look at how much ETH they sold in the early days, it was a lot. Because obviously in the early days, no one knew that ETH was going to be as big as it was. Back then, I mean, the funny thing is about exponential growth is that ETH started off at 30 cents, right? So like whatever amount it was, 100,000 ETH at 30 cents is not very much money, but 100,000 ETH at the current price is a crap ton more money. So they obviously want to be strategic about when they sell, take it to fiat. I'm sure they're getting yield on the fiat that they have in their bank accounts too, obviously. In the high rate environment, it's better for them to do that. But yeah, they're not just selling the ETH for nothing. They're selling it to fund the ecosystem, and the money definitely goes to the places that it needs to, which is cool to see. But anyway, you can check out the latest allocation update here. I'll link it in the YouTube description below. All right, so as I mentioned the other day, EigenLayer is live on mainnet in a very limited fashion, very guarded launch fashion here, and there are a couple of dashboards to actually track their growth. So Nethermind has one and Parsec Finance has one. So I'll link both of these in the YouTube description, but you can basically see on the Nethermind dashboard a breakdown of things like the cumulative deposited tokens by day. Obviously, it being so limited, this isn't going to really show you much just yet, but obviously when it opens it up more, there'll be more and more kind of like a data here. Deposited tokens per day, split in the, between STETH, RETH, and CBETH. Withdrawals and more information on withdrawals there, deposited tokens, and the address list. And I think Parsec gives a similar view in terms of the data that it displays, but in a different kind of like a different layout here as well. So yeah, you can go check these out for yourself if you would like. Not too much going on here. Obviously, as I said, there's the limit there and everything. It's not like EigenLayer is open in a full unlimited mainnet capacity just yet, but it's great to see some early dashboards that can already track their growth, because I'm sure that limit is not going to last very long, and they're going to be opening it up step by step for quite a while there before eventually just going to a fully open mainnet launch. All right, Coinbase has announced today that you can now earn 4% in rewards on your USDC. So you can go to coinbase.com/USDC to start earning this. Now, I don't know how many of you hold USDC right now over holding something like ETH. Obviously, maybe you have USDC and you're waiting for like a dip to buy. Maybe you think ETH's going to go lower or something, or maybe you're trying to buy a token and you're thinking that's going to go lower. Well, now instead of just holding your USDC or maybe putting it in something that kind of like yields lower than 4% in DeFi, because I know that the stablecoin yields in DeFi aren't very high right now. You could do it through Coinbase. Now, obviously, this is a custodial service, but I mean, USDC is already a centralized stablecoin, so you already are exposed to centralization risks there. But I don't think the risk is really that big. Because USDC obviously is issued by Circle in partnership with Coinbase and heavily regulated within the US. It is probably the safest centralized stablecoin that you can kind of buy. And obviously we did see the DPEG event with USDC, but I remember saying back then that it wasn't a big deal, right? It wasn't something that was going to actually result in people losing money unless they were panic selling their USDC, because within like 2 to 3 days it got resolved. Now, of course, there was a hit to USDC's market share because of that event, and also because of the increased regulatory pressure on Coinbase. But I don't think that there's any reason to worry about USDC. I mean, we know that it's fully backed by all the assets and the various assets that are backing it, with cash and cash equivalents, and yeah, now you can use it to start earning these 4% rewards, which is kind of funny because the SEC went after Coinbase for a similar product to this. I don't know if it's the exact same product, but a similar product to this, and got them to basically shut down that product. And this was a while ago now. It might be even over a year ago or something like that. But they're able to offer this product. Now, in terms of where the yield is coming from, I think it's being subsidized by Coinbase themselves, or Circle themselves in some way. I think it's coming out of like a potential marketing budget. I'm not exactly sure. I haven't looked into exactly where the yield is coming from here. I don't know if they actually list it on the on the actual website, or if it's buried somewhere. They may list it in some document somewhere that I don't want to kind of like peruse on the video here, but you can actually check that out for yourself. Yeah, you can learn more about USDC rewards here. There's a section here I think that explains it. Yeah, so yeah, it kind of explains it here, who it's available to. So it's actually available to Australians as well. But if the funny thing is, like, I don't actually hold USDC, mainly because of currency risk, because I obviously am in Australia, I'm AUD based, and there's stupid tax implications for going between USDC and AUD that I have to record, and it just becomes too much of a headache. It's not even really worth the hassle, because the AUD in my bank account is earning a yield already, and just going through the headache to basically have USDC and put it in Coinbase or something, the tax headache is not worth it there. Okay. So they've got like a where do a USDC rewards come from section right on this page, which I will link in the YouTube description below for you guys to check out. But the USDC rewards is a loyalty program that is funded with Coinbase's own funds. The program is designed to incentivize more of our customers to use Coinbase services to store their USDC. So they do not lend or take any action with your assets unless you specifically instruct us to. So, okay. They're basically funding this out of the yield that they're getting with all the USD that they have backing USDC. So they're either paying out all of that yield or most of that yield, because I wouldn't imagine they're getting much more than 4% on the USD in a bank account. But obviously they're doing this because, I mean, one, it's a growth vector for them, but two, I think they want to stop the bleeding, because USDC market cap has been going down a lot since the DPEG event. They obviously want to stop the bleeding here, so it's worth it for them to give up that yield in order to retain customers and to grow their market share here. So that's where the yield comes from, because that's always the first question everyone asks. Where does the yield come from? Is this USDC being lent out? Like, what's happening here? No, it's not being lent out unless you instruct Coinbase to do that on your behalf. So if you're just a regular user, you're just putting USDC in this program, you're getting the yield from Coinbase themselves. So that answers that question there very cleanly, which is very nice to see. And that might be the difference between the product that they wanted to do that the SEC shut down and this product. I think the one that the SEC shut down, Coinbase was actually going to lend out those assets, and that's how they were going to generate the yield. But if the yield is coming from Coinbase's own funds, then I don't think the SEC has an issue with that, because really at the end of the day, it's a customer loyalty or reward program rather than like a yield product that's where your assets are actually lent out to generate that yield there. But anyway, I'll link this full kind of FAQ in the YouTube description below for you to check out. All right, a couple of things from Uniswap today. So I mentioned obviously the other day that Uniswap has announced V4, which brings with it a host of new features. One of those features is something called hooks. So they did a little bit of a deeper dive into exactly what hooks are in this little Twitter thread. You can think of hooks like plugins, and they can describe them here by saying they can introduce code at key points in the lifetime of a pool, like before or after a swap. This lets developers innovate on Uniswap's liquidity and security to create pools with custom features. Now, I'm still digesting exactly what hooks are and how powerful they are and all the use cases behind them. There are some ideas that they've kind of they've kind of listed here, such as dynamic fees and on-chain limit orders and internalizing MEV. But the way I'm kind of thinking about hooks and the mental model I've got for, and this may be wrong, I don't know, it's something like if this then that. So there is an app called If This Then That, or IFTTT, which basically allows you to string together a bunch of actions that can happen either like at the same time or one after the other, or are triggered on certain events. So a lot of people use them for home automation and stuff like that, where they basically say, if if I'm not home, if I go out of Wi-Fi range, turn off all my lights or something like that, or set my alarm automatically, that sort of stuff, right? So with these hooks thing that Uniswap has going on here, I'm thinking of it in the same way, where essentially, say someone does a trade within a liquidity pool. Then after that trade is done, trigger something else to happen. Trigger the internalization of the MEV, like the MEV profits are put back into the pool rather than being paid out to an address, for example, right? Or the rewards that you get for having a Uniswap LP pool, instead of paying them out to you, they get auto compounded in the pool, or maybe they get paid out to go somewhere else. You can see here one of the use cases is auto LP fee compounding, that sort of stuff. So it really does feel like an if this then that for liquidity pools on Uniswap, which I think is really cool. But correct me if I'm wrong on that, guys, if you've got a better understanding of it. But that's how I'm thinking about these things, which obviously lends itself to a host of very new and powerful primitives that can be built on top of Uniswap V4. And then you could have it interacting with all of these different things within the ecosystem. I mean, it doesn't have to just be internal to Uniswap liquidity pools. You can interact with all these different contracts, on chain, just like something like a flash loan would interact with. When someone uses a flash loan to do something, they interact with a bunch of different contracts. Well, now you can do that internal to the Uniswap V4 pool, and then kind of like hook together different actions. So I guess that's why it's called hooks, right? So yeah, but anyway, you can read their little thread here. I'll link it in the YouTube description below. And the second thing on Uniswap, which is actually pretty topical because I was talking about this yesterday. So the Uniswap Foundation convened a bridge assessment committee to develop resources for the Uniswap DAO to evaluate bridges to use for cross-chain deployments. So they've published the results of this committee's work in this bridge assessment report, and it is quite lengthy and goes through many of the popular bridges here, which you can give a read through. So it is very text heavy. There are a lot of different kind of like breakdowns. There are breakdowns of each of the most popular bridges, such as like Wormhole and Layer Zero, and individual reports for these things, which are hosted on Notion here. So you can see on my screen the report for Wormhole here, as well as the parent report. So I mean, you can probably just read the parent report and get most of the information that you need to here. But this was done in the context of Uniswap and what Uniswap could use for pooling and what LPs can use and stuff like that, and how it can all work with Uniswap governance and that sorts of stuff. So yeah, I just wanted to put this on your radar, and you should definitely go check this out. But I want to see more of this kind of stuff being done around bridges. I know that there's a few different posts on bridges. I remember I highlighted one from 1KX Capital. They put together one about bridges, but it might be outdated at this point. So I want to keep seeing these things. L2Beat's doing a lot of work around this because, as I mentioned the other day on the Refuel, bridges are only going to get more popular. They are honeypots for attackers and hackers because they have so much value in them, and they have various different designs which could lead to potential exploits or bugs that we just don't know about yet. And we need to understand them deeply so that users can basically go with the bridge or use the bridge that they trust, right? That they don't get rugged by some kind of bridge, or they're not using something where they get wrecked by. And then, in order for the ecosystem to keep track of like all the different IOUs and native assets and stuff like that, we definitely need more literature around bridges generally. So kudos to the Uniswap DAO for commissioning this report. You can check out this bridge assessment report in the YouTube description below. All right, Zapper has announced that they've launched event curation, allowing you to contribute and help make on-chain events understandable to everyone. So they, following the recent introduction of Zapper's activity feed, users can now monitor all events occurring on Ethereum, be it through a general activity feed or their account transaction history. And they continue, while we don't currently provide full coverage for Ethereum in regards to readability, some of you might have come across the notorious did something event. Now you have the opportunity to aid us in understanding and curating these events. So basically what they've launched today is a way for people to crowdsource what each of these on-chain actions do. So you can essentially see an event that's labeled quote unquote did something, and there's an edit icon at the top right corner. By clicking on this icon, you'll be guided to assist the Zapper team in interpreting the event. After you've made a submission, you can check its status on the new My Submissions page, and then Zapper will review your submission promptly and keep you updated regarding its progress. I think this is a really cool way to crowdsource information about on-chain activity, so the Zapper team doesn't have to go through every single thing and label it. Obviously, they're going to have to review the submissions, but I think that's a much more scalable and faster way than the Zapper team having to go through everyone's kind of activities and try and potentially guess what's happening there and maybe get it wrong, maybe display the wrong info. So it's better this way because it gives them basically a starting line, essentially. It gives them somewhere to start, and they can check that it's all valid, and then it goes in there. And it's also, I think, very useful for people who just want to label it for themselves as well. So instead of seeing did something, you know what you did, so you basically edit it and mark that for yourself there. So just a cool little feature from Zapper that I thought was worth highlighting. You can go check it out. I'll link it in the YouTube description below. All right, so an announcement out of Privy today. So Privy has announced something called wallet pre-generation. So users can now mint or airdrop assets directly to a user's email address, phone number, or socials. And the best part is that no user action is required. Engage a user even if they've never used your app or Web3 at all for that matter. So the wallet pre-generation is as simple as specify the identifier that will own the wallet, mint or airdrop assets to that wallet, and users claim by signing in with this identifier. Users will have wallets waiting for them upon sign-in. So this is basically a way to essentially give users a wallet without them having to create it themselves, and then you can send things to them based on an identifier such as a GitHub account or a Twitter account or an email address or potentially even a mobile number, which is really, really cool because this is a way to, I guess, get new users, because essentially the user could see something like, for example, say someone uses wallet pre-generation for their NFT mint, and then they essentially automatically use this kind of Privy tool here in order to mint NFTs and airdrop them to a bunch of Twitter accounts that they have a list for, right? Public Twitter accounts that they have a list for, and then say that person on that Twitter account goes to this NFT project and logs in with their Twitter account, and then automatically they have an NFT waiting for them in a wallet. So yeah, this is a really cool way to engage new and potentially even existing users, not just with NFT mints, but with really anything, with really any airdrops that you can think of. And and you don't have to just do it based on Ethereum wallets. So this is actually potentially a way to do more Sybil-resistant airdrops, where essentially you can airdrop to users based on more than just like on-chain criteria. You can base it on different criteria, like, you know, for example, GitHub activity and stuff like that, rather than just on-chain stuff. Because at the end of the day, a lot of people, you don't know their Ethereum address unless they have like a public one. That, like me, for example, I have sassel.eth, but that's not like all my Ethereum address activity, right? I have multiple addresses. So you could base the airdrop on something else that is more public, like my Twitter activity or my GitHub activity or anything like that, right? So I think that's actually really cool. So just a cool little feature for developers to play around with from Privy here. I'll link it in the YouTube description and you guys can go check it out. All right, last up here, Rebecca Rettig, the Chief Policy Officer at Polygon, has put out a tweet thread today discussing this new website called thevalueprop.io, which is an open database showcasing amazing use cases for blockchain technology. So now whenever someone asks you, what's the value prop, or, you know, what is crypto good for, what are blockchains good for, what are the use cases, you can go to this database, which is at thevalueprop.io/database, and you can sort by different filters here. So for example, If you want to sort by finance, you can check out all the finance app use cases. You can sort by like investing, for example, and then different networks as well. So you can just go Ethereum here, and you can see the finance applications in the investing category, and then you can go check them out here. Now, obviously, this is very early days for this list. It's going to get better and better, and you can submit your own kind of projects or submit a project that you think should be on here. But yeah, this is actually really great because there's a lot of people who constantly ask, what's the use case for crypto? What are the apps? What's actually being used? What are the different kind of verticals? I hear this thing called DeFi, but what else is there? Hear about NFTs. What else is there? So this is going to be a great database to keep tabs on in order to see all the different apps and basically have an easy way to filter through them. But personally, I just, my first little bit of feedback here is maybe to be able to sort them by something other than alphabetical order, because you can see that the default sort is by alphabetical order, and then when you kind of click here, you can actually just filter. I would like to sort by, I don't know, activity or the amount of Ethereum addresses that have interacted with it, or its TVL or something like that, right? Just to be able to get the apps that are, actually used and on mainnet, rather than just all the apps just to the top here. But I'm sure they'll add that feature as time goes on, as this is still a very new website. And that was just launched basically yesterday, I think. So yeah, you can go check this out for yourself. It was launched by Polygon themselves, which is very, very cool. But yeah, I'll link this in the YouTube description for you to go check out. All right, I've got a few minutes left here. There was a topic that I wanted to talk about today, not about the markets, because I've talked about the markets too much lately, and I don't think it's really relevant anymore because my opinion hasn't changed. I think the rest of this year is just going to be a sideways crab market, but there's still going to be plenty of really cool things happening on the fundamental side of things. But that is what I actually wanted to talk about. So I had like a friend ask me, and I don't know if I mentioned this yesterday on the refuel. My memory is shocking lately, but I had a friend ask me recently, he's like, what happened over the last few days for people to get excited about in crypto? Because obviously he was aware of maybe not the last few days, like the last couple of weeks, because obviously he's aware of things like the SEC going after Coinbase and Binance and other regulatory issues with centralized exchanges and the security stuff and all that kind of crap, right? He's obviously aware of that because that gets a lot of attention on Twitter. But obviously he doesn't watch the refuel, so he doesn't know what's happening in the Ethereum ecosystem. And I'm like, okay, man, okay. So I went to the Daily Gwei YouTube channel. I just looked through all of the videos that I had done over the last 2 weeks, and I started rattling stuff off to him. I'm like, what do you mean, like, nothing has happened in the last 2 weeks? Like, did you not hear about EigenLayer going live on mainnet? Did you not hear about Uniswap V4 being announced? Did you not hear about Polygon announcing Polygon 2.0? Did you not hear about Tycho raising money and Connect raising money and the layer 2 growth that we've been seeing as well, and stuff like that. And I guess like new staking protocols going live, like Swell, for example, and them growing. Like did you not hear about any of this? And I don't think he had really, and because it had been overshadowed on crypto Twitter at least, by all of this noise. And that's the thing. If you pigeonhole yourself into like one news stream, even if it's like a social media platform where it has multiple different news streams in one, but you're still pigeonholing yourself to crypto Twitter. And crypto Twitter likes to focus way too much on the crap. Like, it's just actually, honestly, crypto Twitter, 90% of the time, and I know I contribute to it as well, but 90% of the time is shitposting and people just acting scared about everything. It is actually insane how much noise there is on there. And I know, obviously, I have Twitter in front of me on every refuel, but I have to curate all this myself, and I've gone to great lengths to be able to quickly curate all this information so that I'm not bombarded with noise. But I sometimes go to like the For You tab on Twitter, and it shows some of the most popular tweets, and it's always just noise. It's just people that don't understand what's going on in the ecosystem. It's people that's not talking about the really cool stuff that's going on. They're just worried about the SEC, worried about regulations, worried about the day-to-day price movements, and it's just insane to me. And what's even more insane is that most people that I've spoken to about the Coinbase and Binance lawsuits don't actually understand what the SEC is going after, what they're suing. The SEC is not suing the issuers of the tokens that they listed that they believe are unregistered securities. They are suing Coinbase and Binance, and only Binance's US arm, because they can't touch Binance Global because obviously it's not in the US. So they only use those tokens in those lawsuits as evidence, or as evidence that, or as stuff that they think is evidence against Coinbase and Binance, to charge them with or to sue them for trading on the secondary market unregistered securities. And at the end of the day, like, they're not going after the companies, one, because a lot of these companies that originally issued, or a lot of these foundations that originally issued those tokens, are outside of the US jurisdiction there, or the SEC's jurisdiction there, and two, it's much harder to go after those individuals than going after, Coinbase and Binance, even though I think they're making a mistake going after Coinbase. And obviously, I'm not a legal expert here, but it's insane how many people thought that, or didn't realize that's what the SEC was doing. They're suing Coinbase and Binance. They are not suing Polygon. They are not suing Solana, or I should say Polygon Labs, or Solana Labs, or I guess IOHK for Cardano. They're not doing that. They're just using these tokens as evidence. So that's another thing where just the noise of crypto Twitter and the noise of just general crypto media gets things wrong and portrays the wrong information. And that's something that obviously frustrates me as an educator and gets me riled up about, about this stuff, and gets me ranting on the Refuel about it, because we shouldn't be focused on all of that crap. We should be focusing on the fundamental stuff that's being built right now. And there's so much exciting stuff going on. You guys hear it every day on the Refuel, but generally, even outside of Ethereum, even just, general stuff like, for example, all the positive stuff happening on the regulatory front, where we actually have people pushing back against the SEC. We have, we potentially have big companies like BlackRock. They just announced, well, BlackRock didn't announce it. They just filed to get a Bitcoin ETF approved. Obviously, people look at that and think, oh God, another ETF application. It's not going to get approved. But that's not the point. The point is that BlackRock is the largest asset manager in the entire world. They manage like $9 trillion worth of assets. They have a lot of political favor. They're huge to the US. Politicians understand this. So not only are they more likely to get their ETF approved, they're sending a message, because their CEO, I believe it's their CEO, is a huge Democrat. So he's basically sending a message to the Democrats being like, guys, like, this crypto thing is real. It's here to stay. You guys need to stop trying to kill it, right? You need to actually do more to help this industry. So all of these little things that are just under the surface, not on the headlines, but just under the surface, you need to be paying attention to, because that is the alpha. The alpha is not browsing crypto Twitter and watching random Anon accounts spew bullshit and FUD about things. Like, that's not the signal. That's the noise. But I think I'm preaching to the choir here, but I figured it was just worth doing a little bit of a rant there, because I am super frustrated lately. I mean, like, I'm at over 600 episodes of the Refuel, and I'm just so frustrated that the level of difference between the stuff happening when you actually look at the fundamentals and just all the noise and all the crap that people focus on gets me really frustrated. But such is life, such is the way of things. I'll obviously keep doing the Refuel and keep educating you guys on that. But enough of my ranting for today. I've gone over time. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone. Oh, I actually made it the whole week without missing an episode. Woo, go me. Anyway, thanks, everyone.